And on top of all the insurance claims and the FEMA applications that we've been talking about, there's also just the mortgage. People have to pay their mortgage, right? Doug Flynn Zito Capital Management joins us now. Or do they, Doug, right? That is the question. So are there any options? Like, it's obviously a very, very tough situation for people who still owe, and most people do, money on their house. So what are they looking at?
Yeah, well, the short answer is they do need to keep making those payments because it's contractually obligated. However, if your loan is backed by the federal government, there's something that you can absolutely take advantage of. It's called forbearance. And what that allows you to do is pause your payments, either 3 or 6 months, and you can extend that, repeat it until up to a year. Now, the thing about forbearance is that it's not forgiven. It's just that you have to pay it back either lump sum when your payments resume or over a period of time you work out, or maybe even at the end or when you sell the property. But what it does allow you to do is it allows you to take that money that you might have been putting towards a mortgage and put it towards rent or other things that you might have to do in temporary housing. And the thing about this that's interesting to me is that this is for federally approved loans. If you have a jumbo loan, which many of these people did because these properties are worth millions, jumbo loans are not required to have it, although the bigger banks may have it, and I suspect a lot of them will offer it from a PR perspective, but they're not obligated. If you're federally loaned, if you have a federal loan, they do, but you need to find out for sure.
Okay, let me go back to that Wall Street Journal article, which brings up some of these points about whether this is a good idea. If you can pause, should you pause? So the quote is, it might not seem like it makes sense to keep paying the mortgage on a house that burned down, and pausing mortgage payments can be especially helpful if the fire led to, say, a job loss. But for those who can afford to keep making the payments, it generally makes sense to do so. So you agree with that?
I mean, it really can. It depends on the situation.
Okay.
If you need the money for another place to live, obviously you can't do it. But if you have the money, it probably does make sense because you're not getting out of the payments.
Right.
You're just delaying them. So you could do the math on whether or not that makes sense. But I think at this point, it's about getting as much money together as you can so that you can adjust to whatever situation you're going to be in while you're in a rebuild phase. And it's probably not going to be just a year. So even if you get a forbearance for a year, you're probably going to end up taking longer than that to get a new house built and get back into it.
So what do you think is going to happen out there to the market? You and I have talked about the insurance impact of all of this, how much damage is going to be done by all of this. What about the real estate market, people buying houses, or even rentals now, which people have to go into? Bloomberg had a headline about an LA rental hitting $40,000 a month with the fire, so that kind of thing. So what happens to the market out there?
Yeah, it's a little bit crazy right now. There are some anti-gouging laws, but people are just flaunting them because the penalty in California is only $10,000. So and there's threat of jail time, but most people know you're not going to get jail time. So if you've jacked up the rent on these rentals by $10,000 a month and you got to pay a $10,000 fine, people don't care. So a lot of these people are jacking up these rentals. So all these people, and some of them are just paying it because they need a place to live. And so a lot of that's going on. So you have a little bit of this adjusting. They're not supposed to do it. It is against the law, and they shouldn't do it, and you should report them. But this is what's going on. And so there's going to be a lot of flux here. And some people are just going to vacate the area because they're not going to be able to find another place. Right. And so that's going to have some downstream effects. And then the rebuilding costs, and try to get a contractor. As anyone around here knew after Sandy, it was impossible. Right. There's only so many. So there's all these things we're going to have to go through.
It's such an expensive area because it's such a beautiful area to live in many parts of it. But do eventually those prices also come down? Or obviously, or maybe it's just too early to know what the demand will be.
There will be speculation. I mean, some of these right now, somebody's address is worth what the land is. There's no house on it. So land values are far less. And, that's one of the other things people should do is if this happened to you, you can file for property tax abatement because a reassessment, because you don't have a house worth $5 million anymore. You have a piece of land worth $1 million. You shouldn't be paying on a $5 million house. But there is going to be a lot of flux on the valuation as people move around and don't move back, and all this speculation that's going to go on. And I suspect that's going to take a while to work itself out, but Doug, eventually they'll be back. Yeah, let's hope. Let's hope. That's usually what happens. Hopefully it happens here. Thank you, Doug. Closing bell time.